On the line in Toronto, we have John. Good evening, John.
Good evening. I'd like to know his opinion, your guest's opinion on the uranium sector, specifically Cameco, out 2 years, 2 to 3 years.
Okay. So John, on the Cameco, certainly the energy group as a whole has been somewhat out of favor. But having said that, the uranium stocks, went out of favor long before the gas producers or the oil producers.
And they were pushed out of favor, of course, too, by the disaster in Japan.
Yeah, there's the disaster in Japan. Cameco had its own operational problems, and so certainly the stock traded, to a bigger discount than it might have otherwise. Stocks rallied off the lows into the low 20s. I think that there is, some positive trend in place. If you look at the earnings estimates for this year and next year, pretty good earnings estimates and revenue growth. I think that's all a positive. I would prefer to see the stock trade through $24 before I enter, which is about 10% higher than here, to sort of confirm the uptrend. I also would like to see the energy group start to participate a little bit. So again, it's in the materials group. It probably has a choppy summer. I do think markets overall later in the year probably have a pretty good lift, but you just have to expect some volatility through the course of this summer if you're going to buy this stock. With a 2-year time horizon, you probably do okay.
All right, then, here's Paul, who's in Red Deer, Alberta. Hi there, Paul.
Hi, Mark. Thanks so much. David, could I please ask you about Walmart? I don't hold the stock. I think it's been somewhat range-bound there for quite a number of years, but in the last year or so, it seems to have broken up to the upside into a new higher trading range. What do you think? Thanks so much.
Thanks, Paul. All-time high today on Walmart. Do you get in here, and why is it here?
Paul, there's a pile of companies, large-cap U.S. stocks that went out of favor in 2000, have been seeing multiple compression for 12 years. They've grown into their earnings and now breaking out of the long-term range. This is in absolutely the right spot. Target and Walmart both look extremely good. They're winning market share as consumers come down market. They're executing extremely well, and they've got global growth attached. So it's a stock that I'd be very comfortable buying, and the fact that it's up is a good thing. It's broken out of its range, and you're starting to see some expansion in multiples. So, the stock's trading at 15 times estimate. It obviously is a call on the U.S. economy to some extent, but it's the low-end consumer, which I'm less concerned about.
But you're not in it?
We're not in the stock currently.
How come?
Well, because in general, the consumer discretionary group has had some difficulty recently. But frankly, Walmart and Target really are bucking the trend, and they are, among the strongest performers in the market right now.
Yeah, but did you miss the boat on this, or did you contemplate it a while ago? Or?
Yeah, we have very little retail exposure. Mm-hmm. In general, we had concerns about the U.S. consumer. So far, the consumer that's shopping at Walmart is confounding us. I would buy the stock here. As long as you understand we're going to probably have a bumpy summer from an equity standpoint. Mm-hmm. I think there are better sectors to be focused on, and we'll talk about them. I do think there are places to make money, but this is a stock I'd be happy to own.
All right, David, here's an email on JP Morgan. I believe it comes out with earnings later on in the week. Where do you see JP Morgan going after all the big debacle with Mr. Diamond and the huge write-down? Yeah,
so JP Morgan, arguably, despite the problems that they had with their write-down, is really the best managed U.S. bank, and so you're buying quality. The group is still difficult. There's all kinds of political pressure on the group. They are a target of regulation and margin compression, so that is a problem for the stock itself. Arguably, it probably will perform better than most of the U.S. banks. The only problem that you're seeing is it traded at a premium multiple because they stayed out of trouble. And as soon as they got themselves into difficulty, some of that premium has come out, and they're going to have to earn their way back into it. So I'm neutral on the banking group. Within the banking group, JP Morgan looks pretty good. If I had to buy one, though, I'd probably buy U.S. Bancorp, which is more a regional bank, and they have not had any missteps. Stock's behaving well, one of the best stocks in the group.
All right, David, here is an email as we move over to agriculture. Here's, sorry, it's a call. This is Ian, who's in Whitby. Go ahead, sir.
Good evening, Mark and David. My question is about Agrium, particularly with the weather problems they're having in the United States and presumably the poor crops that will result. I'm wondering if the lower revenues is a positive, or if the lower yield is a positive or perhaps a negative for a stock like Agrium.
Right. So at the end of the day, the Agrium is going to be driven by crop pricing. and certainly the corn and the wheat have moved up sharply in price. We own Agrium, we own CF Industries as a trade, and I want to make that clear. This is a weather-based trade. It may be short-lived. So if the weather breaks and the crop winds up being fine, this group could pull back. So I think that there is some risk in that. You have to understand it. And these are more traders than necessarily long-term.
When did you get into this as a trade?
About 2 weeks ago.
2 weeks ago.
And we own some CF. You know, the agricultural commodities are bucking the trend in the rest of the commodity space. But as it is right now, there's very strong price performance in corn and wheat, and likely in the near term it performs pretty well. But it is probably more of a trade than anything else.
And there's a key USDA report coming out, monthly report tomorrow, so that's worth watching on the crops. Here's Linda, who's in Lethbridge, Alberta. Hi, Linda.
David, I know you're a big fan of stop losses, and I've owned TELUS for the last year or so, so I've got a gain in it. Would you put a stop loss under TELUS? And if so, how do you figure it out, and where would it be right about now?
Well, that is a tough call. Listen, TELUS has been a long-term hold for us. We've had it for a long time. And I think they really were one of the first companies that really got the appetite for yield when they came out and said, we will raise our dividend twice a year for the next 3 years. And the stock's never looked back since. Right?
Beautiful chart.
This was a poster child for what corporations should be doing with their cash flow, especially strong free cash flow generators. On the TELUS, we own the stock. I think that I would look at a stop somewhere around 58, which would be a break of some recent lows. Having said that, we're really nowhere close to that. And against a very tough market, it's one of the strongest performing stocks in the market. You're getting good yield, and you're getting dividend growth. We own TELUS, we own BCE, we own Verizon, we own AT&T. This is exactly in the sweet spot for what investors are looking for right now.
And you've held these for how long, generally?
Oh, we've had TELUS and BCE probably for 3 years. And we didn't own them for a long time before that. We added Verizon and AT&T over the last year, and then we have some other companies that are plays off of telecom and data, like American Tower.
Right, which is one of your top holdings, I noticed in your fund here, American Tower Corporation. All right, a short break here with David Burrows. We'll come right back. We'll have a look at his past picks, none of which he still holds, but we'll find out what they were and how they did right after this.